I was having dinner with a friend not long ago in New York City. We met at a place called Oriole, which is in Midtown. My dinner companion that night was a senior advisor to BlackRock. As you may know, BlackRock is now the largest asset manager on the planet. It directly manages $5 trillion in assets, and it oversees another $11 trillion through its Aladdin platform. That means one firm controls more money than the GDPs of China, Russia, and Japan combined. Anyway, my dinner companion happens to work directly for BlackRock's CEO. As we nursed our white wine and the evening wore on, she let something slip. If I remember her words, she said something like, "They want to tell us we can't sell."
Former threat advisor to the White House, CIA, and Pentagon, Jim Rickards, explains how Project ICE-9, which is code for the financial reset, is being readied by BlackRock and other financial institutions to facilitate the New World Order. So in this video, we're going to break down what is ICE-9, the connection between Ripple and XRP, the International Monetary Fund, the roadmap for real-time gross settlement services beyond 2024 with Ripple, what the governor of the Central Bank of Japan has to say about settlements with cryptocurrencies, the global financial and monetary system by 2030 according to the World Economic Forum, what it's going to look like, and some key players and exactly what they have to say. That all ties back to Ripple and XRP. We have to break down some major documents from the International Monetary Fund about what they're planning on doing that we all need to be ready for, and how the revolving door in the world of finance is all leading to Ripple and XRP, former regulators serving as directors or advisors at cryptocurrency companies. The list is long, it's extensive. Jim Rickards' shocking price prediction for gold, and it's not just some random guess. What that's going to mean for the US dollar and the savings in your bank account. The price of gold over the next few years as gold is breaking out, forming a new all-time high. One of the most important books that you're going to read all year by Jim Rickards. We're looking at the chart for the entire altcoin market and what needs to happen next for your portfolio to go parabolic. Comparing that to Bitcoin, where we are in the cycle, the US debt clock and where this is going to lead over the next 12 months. And then what the markets would look like under a Trump presidency or a Kamala Harris presidency. And then we're going to look at HBAR. We're also going to look at XLM and the XRP price chart. That way you have all the information to do your own research so you can be able to protect your finances and also scale your wealth over the next few years in these uncertain times. So comment 777 if you're feeling blessed, if you're feeling bullish, and if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by tapping the like button. Let's run up the likes on this video. Subscribe to the channel. As always, let's run it.
If I remember her words, she said something like, "They want to tell us we can't sell." What was she talking about? Who was she talking about? I placed a few calls, first to my contacts in Washington, then to a few people on Wall Street. Soon I was on a plane for a series of meetings to London, to Geneva, back to New York, then down to South America. As I began connecting the dots, a pattern emerged. It revealed a network of more than 189 individuals positioned inside the world's major financial institutions. Some of them hold senior positions inside the IMF, World Bank, and every central bank in the G20, including our own Federal Reserve. These elites share one vision, and they're about to make it a reality. That vision is one world order, one world taxation, and one world money. They've worked for years behind the scenes preparing to realize that vision. They've literally rigged the laws of international finance. Everything is basically in place right now, and there's essentially no way to stop this from happening. When the crisis hits, they'll flip the switch, freezing the global financial system. That will give them time to reset the world economy according to their vision. As the coming crisis unfolds, President Trump will be powerless to stop it. In fact, trying to stop them would probably weaken the president's power altogether.
That is amazing, Jim, really. So what did these elites want from your contact at BlackRock?
Basically, they want to classify BlackRock as too big to fail. The technical term is Systemically Important Financial Institution, or SIFI. That designation normally applies to banks, such as Bank of America. If your bank gets the SIFI label, it means the government will bail you out first in a crisis. But it also means you must turn over control of your bank until the crisis subsides. In this case, they're trying to reclassify BlackRock, an asset manager, as too big to fail. If they succeed, they'll be able to freeze BlackRock when the crisis hits. BlackRock clients won't be able to sell. They won't be able to buy either. Their accounts will go dark indefinitely. And the elite operatives will take control of BlackRock's assets remotely via the internet. But our research shows that their ICE-9 plan goes much, much deeper than that.
Now, you refer to their plan as ICE-9. You just said that. What does that mean?
It's a reference to the Kurt Vonnegut novel, Cat's Cradle. In the book, a mad scientist creates a new form of water molecule called Ice-9. When it comes in contact with other water molecules, it freezes them at room temperature. One drop of Ice-9 can freeze the whole ocean. And that's what these elite operatives are about to do to the world economy.
Now, can you share with our viewers exactly who these operatives are and what their ultimate goal might be?
Like I said, John, more than 189 elite agents have slowly wormed their way into leadership positions across the board. They now sit at or near the head of the IMF, the World Bank, and even our own Federal Reserve. They also control much of what happens at the central banks of China, Russia, India, Brazil, Canada, and Europe. As you know, these institutions form a kind of global superstructure. It forms a kind of snare net encircling all nations. Their leaders aren't democratically elected. They're not accountable to you and me. They're beyond the reach of government and citizens, and yet they hold the fate of the global financial system in their hands. To get a sense of how they operate, imagine an array of floating spheres. One sphere is labeled IMF. One is labeled Fed. One is labeled Bilderberg. One is labeled Wall Street. One is labeled central banks. One is labeled intelligence agencies. One is labeled media, and so on. The elites inhabit all of these spheres, and together the network forms a kind of 3D Venn diagram. As I see it, regardless of what sphere they inhabit, the elites all share the same vision: one world order, one world taxation, and one world money. All of their actions are geared toward moving that agenda forward.
Now, are you able to share the identities of these elites with our viewers?
We've identified more than 189 individuals who are, in many cases, hiding in plain sight. Regardless, they all share the same vision: one world order, one world taxation, and one world money. A short list would include Christine Lagarde, Managing Director of the International Monetary Fund, IMF.
All right, Bull Runners, welcome back to the channel. So we just dove right into the deep end there with Jim Rickards' predictions. You know, he's an American lawyer, investment banker, media commentator, and the authors of Matters of Finance and Precious Metals. You know, he's also the author of Currency Wars. And so we have to break down a lot in this video with you guys, in this clip specifically, that's about 10 minutes long, because as he rattles off these names, we're gonna play clips from these people for you guys and exactly what they have to say. The first one is Christine Lagarde, the Managing Director of the IMF.
Into new technologies that will actually change the way in which intermediation is conducted, eliminate some of the barriers, including the unconscious biases that exist out there. And you know, I think in the banking system at large, in many countries, the difference will not be between those who are disrupted and those who survive, but it will be between those who are cannibalized because they are not seeing it coming and they're not embracing it, and those who self-induce that cannibalization. And I'm using cannibalization on purpose because it's a bit of a striking, horrible word. But it's really what it means. It's you're going to disrupt your business model, you're going to change it, you're going to reduce your cost, you are going to expedite your transactions, and you're going to continue to inspire confidence because you will build that on the basis of an existing backbone, which is your bank and the confidence relationship that you've established with your customers. So that's where I see changes happening now. If you think of Circle and Ripples and all those, that's where they are active and helpful.
Mark Carney, Governor of the Bank of England.
Now here's a clip of Mark Carney talking about XRP without directly saying XRP. Remember guys, these people are on non-disclosure agreements, meaning legally they can't directly tell you their plans. And I made this post in our Telegram group right here on how unreal it is that most people can't see the forest through the trees. If you guys want to plug in with our group below, the link will be in the description. We have nearly 12,000 members in that group because the louder that the negativity grows surrounding XRP, the more bullish I become, because they don't want commoners a part of the financial elite. They want you to sell. They want you to doubt the plan. They don't care how skeptical you are or how long you have to wait. In order to win the game, you have to know how they're playing it and the rules that they play by. And if they told you their plan in advance, they wouldn't have power in the first place.
Done properly, fintech can add to the resilience of the financial system. So that's the first point, embracing its promise. The second is to get practical and say, well, and this is part of the agenda, is how do you enable those new technologies? What do we actually do as you move back from the consumer to the technology? What can we as authorities do? And part of it goes right into the infrastructure that we oversee. So I'll use an example in the UK, which is the large value payment system. It's called RTGS. The central bankers in the room all oversee similar ones. What we're doing is we're reforming that so that it is a plug-and-play system. that the innovators that the president spoke of, they can figure out different ways to plug into that system, bypass the banks, have direct access, and then provide more cost-effective services. Now, one of the big opportunities there is exactly what Lesotho Governor Kanyahu just said, which is around cross-border payments. They are currently 10 times the cost, at least, of domestic payments. Unacceptable. We're working with the Bank of Canada and the MAS, both governors are here, of looking at other ways of lowering those through DLT and other technologies. But just by changing the access to your core system, you can start to make progress here.
Haruhiko Kuroda, governor of the Bank of Japan.
So this is a global initiative that has been taking place for years, and the central bank governor of Japan is saying trading is barely used for settlement for Bitcoin. Now, why is that important? Because Ripple's XRP is the currency that's designed for settlement, not Bitcoin. If you guys watched that clip about Donald Trump trying to pay for a burger with Bitcoin, they had to cut the clip because the payment didn't go through, and then they had to awkwardly act like it went through and Bitcoin's going to be used for payments when that's not what the financial elite are using Bitcoin for. They're using it as digital gold as a store of value, whereas XRP, it's low cost, it's fast, and everything is on the ledger to see, so it's traceable. And this is exactly what the financial elite want.
Agustin Carstens, governor of the Bank of Mexico.
So not only was Augustine the governor of the Bank of Mexico, but here he is with the Bank for International Settlements telling you their plan.
We tend to establish the equivalence with cash, and there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also we will have the technology to enforce that. Those two issues are extremely important, and that makes a huge difference with respect to what cash is.
Mario Draghi, president of the European Central Bank.
Now, when we jump over the pond to Europe and the UK, who do you think sits at the round tables with the regulators? That's Ripple. Ripple is helping to upgrade the Bank of England's real-time gross settlement system. The Bank of England presents this in their roadmap because Ripple has a seat at the table amongst others, such as Visa and different regulators. And if we look at this official document right here from the World Economic Forum titled Global Future Council on Financial and Monetary Systems that shows us their plan for the monetary system by 2030, we can see a few key people right here that play a major role.
Zhu Min, former deputy managing director of the IMF.
Right here, he's also the chairman for National Institute of Financial Research. And in this document, it says the world community has agreed to the United Nations Stable Development Goals, which are part of a broader 2030 agenda with specific milestones related to sustainable development. And their sustainable development goals have to be met at a time when the international monetary and financial landscape itself is going through dramatic transformation. So number one, their new economic poles are emerging. Number two, power is moving away from public institutions to non-state actors. Number three, accelerating technological changes are disrupting existing business models. And number four, demographics are shifting. All of this is happening in a political atmosphere still tainted by the financial crisis of 2008 and decades of increasing inequality with most societies due to massive quantitative easing and money printing that is devaluing fiat currencies. So they're making a promise here in this document to successfully harness the two opposing forces of decentralization and integrating a new global financial system to provide universal access to financial services to fund real economic activity, manage wealth, diversify risk, because number one, the US dollar is losing its preeminence. Number two, there's been a decrease in use of paper money and a transition to digital money issued privately or by central banks, where acceptance and adoption of cryptocurrencies will continue to spread. And these are their words, not mine. Remember, guys, I'm not a financial advisor. These videos are purely for education and informational purposes only. Obviously, crypto is risky. You could lose money in these markets. And these videos are just purely designed to help you do your own research because we provide the information so you can form your own opinion here. But this is all too obvious because they put this in these official documents and we string it together so you can understand what's going to happen next. Because number three, traditional bank business models will be challenged. Fintech will transform traditional banks and insurance companies and other types of companies. You see Donald Trump launching his World Liberty-Fi. With the emergence of new decentralized entities providing liquidity and new financial services, all of these new technologies are creating a new asset class that directly match savers and borrowers and foster risk mitigation through the commoditization, I know that's a complicated word to say, of financial data, but also lead to more fragmentation and dislocations. Now, what does all that mean and why is that important to you? Well, the reason why this is important for you to pay attention to is because this change is inevitable. It's going to directly affect you and your money for the future. So if you want to be able to secure your money, protect your wealth, and also scale your income through the right investment so you can have enough money for retirement in times of inflation, then pay attention to this, because what's been slowing this down specifically for Ripple and XRP is their chapter 1. It says it right here. It's regulation. You know, Ripple's been going through the lawsuit with the SEC. This is the most important thing that they're working through right now. And so as they work through regulation this year and next year, we're going to see stablecoin bills come towards the end of this year. Ripple's coming out with their stablecoin. This leads us to chapter 2, that's digitization. So by positioning yourself during the regulatory uncertainty, that's what creates opportunity. If there's already regulatory certainty about something, well then by then it's usually too late because all the major players will already have been on board by then. So I'm going to save you guys the boring information. I'm just going to get into the juicy details, because right here where it says European Payment Service Directive, where how payments are going to work between customers, merchants, banks, and payment providers. With financial services, there's aggregators. Usually those are companies like payment processors like Stripe, PayPal. Then you got like credit card companies like Visa or MasterCard. They're going to be moving large amounts of liquidity around at a rapid pace through this digitization. And they're going to do this with distributed ledger technology through the blockchain, using very specific cryptocurrencies. And ultimately, the end game for blockchain technology would be to use it as a basis to create one single record for everyone to use. And a large number of players in the space are already using distributed ledger technology to enhance their core operations. And then they give some examples here like Clearstream and Standard Chartered, where they say Standard Chartered has partnered with Ripple through a multi-bank initiative that offers straight-through processing, real-time settlement, low cost, elimination of reconciliation between multiple international ledgers, improving liquidity and cash flow, reduction of the cost of capital, and better pricing. Also, right here in this document from the International Monetary Fund titled Trust Bridges and Money Flows, a digital marketplace to improve cross-border payments. In the glossary right here, we can see the Bank for International Settlement, CBDCs, DeFi, Liquidity Pool, Real-Time Gross Settlement, USDC, and XRP. And it says in this document, 3 models arise: a private settlement asset and marketplace such as Ripple's XRP, an open source marketplace such as Stellar's Foundation, or more recently DeFi networks, and a marketplace and settlement asset based on unbacked crypto assets. And they also say a public solution has key advantages such as tackling the coordination problems around centralizing participation and liquidity provision, offering clear and trusted governance and operational stability, and providing full compatibility with financial integrity standards, and that's through regulation. Now, a big key thing here is liquidity pools, and we're going to talk about that towards the end of this video on the #1 liquidity pool in the world on the XRP ledger and how I'm earning an extra 1,000 to 2,000 XRP per day. But before we get to that, let's keep listening to what Jim Rickards has to say.
Zhou Zhiuquan, governor of the People's Bank of China. Robert E. Rubin, chairman of the Council on Foreign Relations. This A-list of central bankers and other elites is just the tip of the iceberg. Of course, not one of these elites will tell you outright what's going on, but I've seen and heard enough to connect the dots for myself. Not long ago, for example, I met with one of their senior operatives. He's a leading economist who served as the chairman of the Federal Reserve during the last crisis. He's considered one of the most influential minds in banking today. We met privately during a conclave in Seoul, South Korea. Of course, I'm talking about Ben Bernanke. I came away from my meeting with him stunned and convinced that ICE9 was real. Not long before that, I set up a one-on-one meeting with another member of the network. His name is Zhu Min, the former deputy governor of China's central bank. Until recently, he served as deputy managing director of the International Monetary Fund. Zhu is a brilliant guy, like Bernanke, and he's pleasant and well-meaning. There's no doubt in my mind that he's also a member of the elite network preparing to impose ICE9 on millions of Americans. But I wasn't done with my research. I have since met with dozens of senior officials, intelligence analysts, and former Wall Street colleagues. My quest led to a final meeting, a face-to-face summit with the head of Bilderberg. We met at Rockefeller Center in Manhattan, and he was very eager to get my take on the euro as a currency. I was happy to provide it, of course, in exchange for some valuable intelligence. As I say in my new book, he did not have horns. In fact, he gave me a nice gift when we parted ways, a blue Swedish vase. I keep it in my writing studio at my home in Connecticut. But my point is, I came away from all 3 meetings convinced of one thing. When the next crisis hits, the elites are planning to freeze the financial system, and they'll replace it with a new system, one not based on the U.S. dollar. When that happens, we'll wake up to a very strange and disturbing new reality.
And for our viewers that are watching today, what might their reality look like that morning? How does this manifest?
First, they'll have gone to bed knowing that a massive financial crisis was underway. But when they wake up, they'll find it has worsened and the contagion has spread worldwide. When they go to withdraw money, their ATM will say closed temporarily. When they go to sell stocks, their account will say transaction not available. When they go to their local business, that business will only accept cash if it's open. As citizens realize they're being barred from their money, riots will erupt. It's going to get really bad really quickly.
How would such a freeze actually work? And wouldn't that be highly illegal?
Well, it wouldn't be illegal technically because they've been quietly laying the groundwork for years. They've rigged the financial laws, changed the rules of the game to allow this to happen. The stage is set. They have the levers in place. The lights are positioned. Now someone just needs to flick a switch and they'll impose ICE 9 rapidly. And again, all of this will be legal because they've rigged the system in their favor. Here in the U.S., for example, Congress pushed through something called the International Emergency Economic Powers Act, or IEPA. This allows the government to freeze accounts, assets, even whole institutions at will. The only condition is that there's some threat to national security with a foreign connection. Of course, with a global market, every financial crisis has a foreign connection. Any systemic crisis fits the bill. And the thing is, when the next crisis hits, it's going to be so bad, President Trump won't have any choice but to go along with the elite's plan.
Wow. That is, you have to admit, that sounds somewhat hard to believe. Now, how could these operatives actually freeze a whole country's financial system?
Well, fortunately, we have some recent real-life examples to study. The elites have been conducting a series of dry runs for years, leading up to ICE 9. Look at Cyprus, for example. A few years ago, the Cypriot economy was in trouble, especially the banks. The IMF stepped in and loaned Cyprus $10 billion, but the loan came with strings. Now, pay attention, because this is precisely what they're going to do. But imagine it on a global scale. So in exchange for the capital injection, the IMF demanded control over the Cypriot banking system. More specifically, the IMF froze the entire system, literally every bank in the country. And they did that to ensure the IMF's demands were met, including strict capital controls. So how did all of this impact regular citizens? Their local ATMs went dark. Even the bank branches closed, permanently in some cases. Citizens could not withdraw cash. They couldn't even transfer funds from one account to the other. What came next? Wealth extraction on a grand scale. The IMF basically stole 6 to 10% of all the cash in the Cypriot bank accounts. How did the elites justify this? They called it a levy, the price regular citizens had to pay for their government's missteps. Keep in mind, these asset confiscations were done at the balance sheet level with the institutions themselves. They never had to confiscate individual accounts. They froze every account by controlling a handful of the country's biggest banks. When the next crisis hits, we're going to see this here in the U.S. and around the world. And it'll be a highly coordinated global attack on the entire system simultaneously.
So yes, that does sound absolutely crazy. But if we look right here where it says ICE 9, global interoperability of next generation emergency calling using internet multimedia, and we scroll down here, it says between February 22nd and March 5th of 2021, NENA, the 911 Association, brought together more than a dozen public safety technology companies for the latest industry collaboration event, which was ICE 9, allowing vendors to test leading edge products and services that will advance public safety from the legacy 911 capabilities. You know, if you're going to call 911 for something, I assume that this is what this means, to data rich, IP based world of next generation emergency communications. So the first ever ICE, held in conjunction with the European Emergency Number Association and the European Telecommunications Standard Institute, was the first coordinated test for emergency call routing across international borders using voice, video, and text to simulate international roaming scenarios. So correct me if I'm wrong here, that would be like a universal alert on everyone's phone, letting them know what's going on. So if this is true and they plan on flipping the switch, well, when they flip the switch back on, they're going to lead everything to distributed ledger technology, and the revolving door comes to cryptocurrencies. And you ask any cryptocurrency company what's the biggest challenge right now, and they'll likely tell you legal and regulatory issues. Because in the US, no one agency has sole jurisdiction over cryptocurrencies. There's the CFTC, the SEC, and different agencies have varied interpretations of what cryptocurrencies are. You know, the SEC through Gary Gensler wants to call all of them securities. The federal government considers cryptocurrencies to be money for the purpose of the Bank Secrecy Act and anti-money laundering regulations. Most states also consider cryptocurrencies to be money and therefore require cryptocurrency businesses operating within the state to obtain a money transmitter license. And that's why you see, X.com through Elon Musk obtaining their money transmitter licenses because he wants to turn X into, like WeChat in China. Ripple also has a ton of money transmitter licenses. The CFTC has classified Bitcoin and by extension other cryptocurrencies as commodities, therefore granting the commodities jurisdiction over futures and other derivatives involving cryptocurrencies. Finally, the IRS considers virtual currencies to be property subject to capital gains taxes. And so because the US hasn't been able to get their act together, successfully navigating Web3 and crypto valuations has been very complicated because this industry is so new and they're making up the rules as they go. If we look right here, the former regulators serving as directors or advisors at cryptocurrency companies, this list is massive. We have the SEC chairman, he's the board of advisors over at BitPay, Bitcoin payment service provider. We have a former FDIC chairman, and it was the former SEC chairman, not Gary Gensler, obviously, but the former FDIC chairman is the board of advisors and also a board of directors over at Paxos. That's Sheila Bair. Ben Losky, who is a New York State Superintendent of Financial Services, is now on the board of directors of Ripple. Juan Zarate, who is the Assistant Secretary of the Treasury for Terrorist Financing and Financial Crimes, is now on the board of directors of Coinbase. And the list goes on and on and on. So as former regulators are shifting over to be on board of advisors, board of directors for major blockchain companies, well, they're getting ready to flip this switch. And this is why Jim Rickards is giving outlandish predictions, which aren't really that crazy for the price of gold, but he's saying over $27,533. Listen to this.
You think gold could get to or surpass 27,000, and you say, look, this isn't just some forecast. I didn't just make this up, but you could see gold, I'm not saying in this year or next year, but heading towards 27,000. You say, look, this is not just a number you're making up. We all know, anyone who knows you, Jim, knows you do. You take deep dives, you do a ton of research. So I'd love for you to walk us through how you got to this number and in what time frame you think this could happen in.
Right. Well, there's a predicate, so it's a little bit different than a hard and fast prediction. I did, the number was about $27,000. You're right. There's a predicate, which is what happens if investors, savers, markets around the world lose confidence in the US dollar. And by the way, if people lose confidence in the US dollar, don't think for a minute that they're going to run to the euro, the yen, pound sterling, Canadian dollars, or whatever. They're not. All those currencies are part of a global euro dollar, US dollar system. So if you lose confidence in US government securities, for example, the US dollar, you're not going to run to, German bonds or Japanese government bonds. That whole system is going to be severely impaired, in which case you may have to go back to some kind of gold standard, gold linked, gold backed in some fashion, not because you want to. There's no central bank in the world that wants to go to gold, but they may have to restore confidence. Now, if you do, if you say, okay, we have to get back to some kind of gold system to restore confidence, what would the price of gold have to be to make that system work? Well, we have a lot of historical precedent. There was a real gold standard solid gold standard from 1870 to 1914, modified gold standard from after World War I, say 1919 through World War II, the Bretton Woods standard from 1944 to 1971. So we do have precedent for this. And in every case, you don't have to have enough gold to back 100% of the money supply. Some of the hard shell gold bugs say you do, but that's not true. Historically, you need between 20 and 40%. So let's just take 40%. Look at the U.S. money supply, and I use M1 because it's broader than Fed-based money. It includes checking accounts. It's kind of like the money from the banks that drives the real economy. So if you take M1 and take 40% of that and say, okay, that's how much gold I need to back it up, and then say, okay, how much gold do I have? The answer is 8,133 tons. That's how much gold the U.S. has. And just do the math. And this is, as I say, this is seventh grade math. You say, what would the price per ounce have to be for 8,000 tons to back up M1? And the answer is $27,000. By the way, I did the same math not that long ago. Well, I don't know, 7 or 8 years ago. And the answer was closer to $15,000. But the reason it's higher, gold is still gold, but the money supply is a lot bigger. So with the same amount of gold and a larger money supply, you need a higher price per ounce to back up the money supply. And by the way, I spoke to Paul Volcker about this, and he agreed. He said he wasn't advocating for a gold standard, but he said if you had to go back to a gold standard, he just threw his hand in the air and said, oh, the price of gold would be unbelievable. And of course, he's right. So that number, if things kind of remain the way they are and confidence in the dollar remains, we can talk about that, by the way, because there are arrows directed right at the heart of confidence in the dollar having to do with Russian assets in the war in Ukraine. But if confidence is maintained, then it's a market factor. Maybe you don't get there. But if you have to go back to a gold standard, yeah, $27,000 would have to be the price in order to avoid massive deflation.
So in times of crisis and people worried about what's going to happen to the economy or the US dollar or like ICE 9 happening, well, everyone's going to run to buy as much gold as they can, and silver as well too. When we look at the US dollar index, the DXY sitting at 100 right now, we've been in this bearish channel on the relative strength index since the 15th of April. And so the RSI, the relative strength index, is at 38 right now. We could trend a little bit further to the downside, but I would expect there to be a bounce at some point for the DXY to the upside. And because we've seen gold rallying past its all-time high, that would lead to a correction for gold. But in the macro, gold is going to continue to go up. And we saw the same thing play out back in 2008, 2009 during that financial crisis, where you guys see gold was very volatile from January of 2008 until September of 2009. And then it had erupted from $1,000 upwards of $2,000. It performed a 2x. And so on the right-hand side of the screen, we see gold very volatile during 2020 to 2024. And now that it's breaking out with the DXY collapsing, to do a 2.618 extension, that would put gold at $3,300. To do a 3.618, that's like $4,200. A full extension is like $4,700, nearly $5,000. So I think Jim Rickards' prediction will come true. I just don't think it's going to be, this bull run. But with gold going up, that's going to directly affect the cryptocurrency market. And Robert Kiyosaki posted this saying the most important book today, Jim Rickards sent him a copy of Money GPT, saying that it's frightening because artificial intelligence is going to shake up the world of money. The good news is Jim Rickards' prediction means that Bitcoin may soon top $500,000 in 2025 and 1 million by 2030. So that's a pretty bullish prediction. And according to Common Sense Crypto, has anyone given this a thought? COVID was a worldwide global event to begin the collapse of the world economies. Why would they do this? Well, this may be to set up a one world currency or a one world central bank. Ripple seems to be emerging as a global central bank, and not XRP, but Ripple's new stablecoin may be the one world currency, but XRP could still bridge it to all the other central banks. Now, the image below, or on the left-hand side of the screen here, shows the stellar symbol, stellar lumens. So many people would argue that they're talking about XLM, but David Schwartz even said there could be multiple reserve currencies, XLM and XRP, running side by side on the global stage, and this would be their endgame. The Economist wrote this in 1988 saying, get ready for a world currency. So they've been planning this for decades. And all the world's a stage, it's one big play, and we're starting to see the house of cards fall with Diddy's arrest and who he's tied to. There's tentacles everywhere for that. And so what's happening here is as people get more uncertain in what's going to happen with the US dollar, the banking system, the global elite playing games, with the media, the military, the medicine, the money, and their minds, people are starting to wake up. We're going through a great awakening right now. And this is going to be the largest bull run in history before, this switch is flipped, so to speak. And we'll see what happens when the switch is flipped, if there is that ICE 9 prediction of Jim Rickards, and if that would create the next crash in the market. But until then, we have to look at the charts, because it's fun to look at all that stuff, but if you don't look at the charts and technical analysis and you think things are going to play out completely different this time, then they usually play out like they always play out, and it falls in line synchronistically with macro market events. For example, with the market breaking out right now, this is falling in line with global liquidity expanding, the Fed cutting interest rates, money being cheaper for banks, and we see the markets breaking out for crypto alongside gold. So total 3 is at $602 billion market cap. We're breaking this descending resistance right here. Now, in order to see a trend reversal, we would need to see the market cap break the recent swing high that it got rejected from on the 24th of August and hold it as support, this would be level number 1 to hold. Level number 2 would be the high right here from the 21st of July. If we can break both of these levels and hold them as support, the next move for the market is essentially, you know, really the all-time high. There is another level right here at like $720 billion, but it really would be the all-time high for Total 3 as we make a macro market recovery, and your altcoins would absolutely fly. Now, this would fall in line with Bitcoin's recovery right here, because you guys can see the relative strength index on Total 3 is at 64, also breaking this descending resistance right here, getting closer to 70, whereas Bitcoin's stock to flow, we're still in this range, turning from red to orange. And every single time, if you watch my previous video, that we went from red to orange in terms of the days until the next halving, we broke out for Bitcoin. So I don't think this time's going to be any different. The whole ICE9 prediction from Jim Rickards, he didn't give an exact year, so it's anyone's guess when that could happen. Maybe that will happen at the tail end of 2025, and that will be during the bear market when everything starts to crash. They turn everything off, and then, you know, BlackRock's assets get freeze, Bitcoin starts crashing, XRP would go down too as well during a bear market, along with XLM and everything else. But by then, you know, you'll have caught a lot of profits on the way up, because when we look at the stock to flow line, it's $430 something thousand by, you know, October of 2025. So even if Bitcoin just gets to a fraction of that, like $150,000 to $200,000, altcoins are going to do relatively well. Because when we look at 2014 to 2017 and how this played out with this rounded bottom formation, multiple points of contact for Bitcoin's price chart, you guys can see on the bottom of the screen from 2022 to 2025, we're going through the same thing, where right now we are at this rounded bottom, and the last time that we bounced off of this, the next move up was very, very fast before a correction took place, around $3,000 for Bitcoin. So right here on the 2nd of September, Bitcoin bounced off of the 50 SMA, and if it can hold this as support and we continuously trend higher and we break the high of 19th of August and we break the high of the 29th of July, then the final stop is really the all-time high before we go back into price discovery and start breaching upwards of 74, 75K. And the biggest reason why this could happen before a massive crash takes place is because the US national debt keeps climbing up, global liquidity is increasing. We can see right here, compared to where we were in 1970s in terms of national debt, in terms of trillions of dollars on this linear scale right here, this is ludicrous. So this is why gold is going parabolic right now, forming a new all-time high. And a lot of people are still caught up on who's going to be president, Donald Trump or Kamala, thinking that it's going to affect the markets. Well, historically, Bitcoin and the rest of the crypto market does not care about who wins. The bull run is programmed regardless of who the president is going to be. If you look at Trump versus Clinton, you know, the market rallied up. 2017 did well. Even Trump versus Biden, when Trump lost, the market still did very well. So Trump versus Kamala, obviously, you know, under Trump's presidency, because he is bullish about crypto, it could do better. But even with Kamala, when asked what she would do to bring down prices for the middle class, her response is, you know, I'm from a middle class family where people cared about their lawns, but I'm just going to give money to new business owners. So they're just going to print money. And when they print money, crypto goes up, real estate goes up, stocks go up. So I do think, regardless of whoever gets elected, the markets are going to go up. Now, obviously, that's not a guarantee, but some of the projects I'm positioned in, one of them is HBAR. Now, HBAR has been underperforming the rest of the market alongside XRP and XLM, and I think that's for a very specific reason. HBAR's governing council is massive in terms of credibility. What they're doing in the blockchain space, focusing on asset tokenization for the configuration, issuance, and management of tokenized securities and equities on the Hedera network. You can see underneath their governing council, they have Boeing, Dell Technologies, Google, LG, Ubisoft, WorldPay, among many others. So the fact that HBAR is all the way down at these levels at 5 cents is pretty shocking, but this just follows the psychology of a market cycle. And if we were to trace this up and reduce the transparency for you, we've already been through the hope, optimism, belief, thrill, euphoria, and complacency stage last bull run cycle. And then we went into anxiety, denial, panic, capitulation, and anger by December of 2022, and we're just working our way on out of here. So whether depression is in now or we trend a little bit lower in the short term, eventually we start to see a recovery rally back into disbelief, hope, optimism, belief, thrill, and euphoria again. And so the all-time high for HBAR is all the way up here at 57 cents. So if we were to measure from where we are right now to that, that's 900% away. So that's a 10x just back to the all-time high. And HBAR's market cap is only at $2 billion. So I think HBAR is like a, you know, like a Facebook or a Tesla or a Microsoft or an Apple stock was back in the early 2000s. It's just going to take time to fully appreciate. So we're going to watch this project over the next few months, and I do think it will do well this bull run. A lot of people are counting HBAR out, but it is a project that I hold. Now, again, that's not financial advice, but I like the fact that 74% of the max supply is in circulation. The fully diluted is only 2.7 billion, whereas the market cap is 2 billion, so it's not that big of a difference. And it is down drastically from its all-time high by about a 10x. Now, another crypto that I hold in my portfolio is XLM, because I think XRP and XLM, their price charts are very correlated together. There is suppression taking place on both of them, but it also follows the psychology of a market cycle almost to the T right here. We went through euphoria, complacency, anxiety, denial, panic, capitulation, anger, and we're finishing up the depression stage right now. And so because the price is all the way down here below 10 cents, almost at where we were back during the bear market at like 6 cents, even the previous bear market down at like 4 cents right here, where we were compared to the all-time high, or I guess how far off we are right now in comparison to the all-time high, is about a 7x for XLM. So I think by 2030, these three projects are going to be some of the biggest players, and we're going to see the largest adoption on a global scale, and people are going to be FOMOing in to XLM, they're going to be FOMOing in to HBAR, and they're going to be FOMOing in to XRP when the price starts to run. So they always wait for everyone to be jumping on board as a confirmation bias that like, oh, it's what the popular people are doing because everyone's doing it, and that's what the sheep do. If you watch a sheepdog herd the sheep, they all just follow each other, and the sheepdog doesn't need to herd one sheep individually and all of them. It just moves the herd and they all move with each other. And so that's how crypto works. If you can be a contrarian and be a wolf, remember, wolves don't lose sleep over the opinions of sheep. If you can't handle the pain during a bear market or the boredom and doubt in a ranging market like we've been going through over the past 6 months, then you don't deserve the gains in a bull market. Right now, if we look at XRP's market cap dominance, it's sitting at 1.5%. If you look at this zone of support right here, back when we were at these levels, was all the way back in 2021 before XRP exploded. And then before then was February, March of 2017, before we saw this massive green candle come in for XRP's dominance, and XRP absorbed over 30% of the market cap of the industry. Now, I don't know if it's going to be that much because there's just drastically more cryptocurrencies, but I do believe there will be a bounce for XRP. And what the chart will look like in terms of market cap dominance is we'll see a retest of this descending resistance right here. Maybe we see another back test, kind of similar to what happened back here at this zone of support. When we broke out on the 1st of January, then we back tested by March of 2021 because there was that whole lawsuit with the SEC, and then we break this descending resistance, hold it as support for dominance, and then we see XRP snap to the upside. This is what I would expect to happen leading into the tail end of this bull run for the end of 2025, and XRP to be one of the biggest performers that melts everybody's face. So in my opinion, there's still time to accumulate XRP. I'm accumulating XRP every single day. So all you need to do right now is click the links below. If you go to bullrunners.com, you're also going to get early alerts on explosive altcoins, daily market analysis videos for breaking news updates like this, because together we believe that the spending power of the dollar is just going to keep going down in value. That's a fact based on inflation. Blockchain technology, distributed ledger technology, and cryptocurrencies have been going up in value over the past decade. That's the truth, and together we're all going camping on the beaches of the moon. I'll see you guys on the next video. I will see you on bullrunners.com through the links below. As always, you know what to do. Stay bullish.